Ever had this feeling? Bitcoin moves, but no one saw it coming? No news, no headlines, no pump tweets, just a $300 million candle. Out of nowhere. But here's what really happened. The money did move. It just moved before the price. And if you knew where to look, you'd see the tide coming before it hit. Let's decode the signals smart money watches before they buy or sell. This is Crypto Decode course. Episode 4. Whale Inflows. How big money moves before the chart does. What are they? Every time a wallet sends crypto to an exchange, it becomes available for sale. That's called an inflow, and it usually signals that the holder is getting ready to sell. On the flip side, when coins leave exchanges, especially in large amounts, that's an outflow, often meaning accumulation, long-term holding, or cold storage. Why does this matter? Because whales don't buy and sell like retail. They move funds quietly, off centralized platforms, on-chain. If you track those movements, you're not watching price action, you're watching intention. Inflows and outflows are not technical indicators. They're behavioral indicators. They reveal what wallets are planning, not just what they've done. Why inflows matter? Let's start with inflows. When a major inflow hits, for example, 3,000 BTC sent to Binance, that's a red flag. Why? Because whales rarely deposit unless they intend to do something, either to hedge, to rotate into stablecoins, or simply to sell. Large inflows tend to precede increased volatility, liquidity events, weakness near resistance zones, and when inflows come after a rally, it often signals that the whales are ready to take profit, just as retail enters FOMO mode. It's not manipulation, it's preparation. Why outflows matter? Now let's flip it. When coins leave exchanges, especially in size, that's often a bullish signal. Outflows usually mean whales moving funds to cold storage, reduced selling pressure, long-term conviction, and it gets better when you combine this with stablecoin flows. Because if USDT inflows are rising and BTC outflows are rising, smart money is bringing in capital and accumulating. These aren't just transactions. They're the footprints of market intent. Real example. Let's take a real-world case. June 10th, 2025. Bitcoin had been chopping sideways around $105,800. Volume was low. Price looked boring. But on-chain data told a different story. Glassnode reported $420 million in BTC outflows across Binance and Coinbase. At the same time, Arkham showed 3 institutional tagged wallets withdrawing funds. No one on Twitter noticed. And yet, within 12 hours, Bitcoin blasted past $108,000, and by the next day, it was touching $112,000. What triggered the move? It wasn't news, it wasn't macro, it was capital rotation, and the clue was already on-chain, for those paying attention. How to use it, the real edge. So how do you actually use this? Here's your framework. 1. Outflows plus flat price equals silent accumulation. Whales accumulate when price is quiet. You often see BTC pulled off exchanges, while the chart barely moves. That's the load-up zone. 2. Inflows plus resistance equals distribution trap. When BTC pumps and whales send coins to exchanges, be careful, it might be the top. 3. Combine with OI, funding, liquidation zones. Example, outflows spike. Open interest is rising. Funding turns slightly positive. Liquidation clusters just above. That's your signal. The spring is coiling. Smart money is about to strike. And if you're still staring at RSI, you're flying blind. Best tools to track. Flows, want to track this yourself? Glassnode, clean dashboards for BTC, ETH, and stablecoins. Arkham Intelligence, wallet-level views, real-time alerts. CryptoQuant, excellent multi-asset inflow, outflow tracking. Whale Alert, X, Twitter, big transactions pinged live. Look into Bitcoin for long-term flow trends and hodler behavior. You don't need to track everything. You just need to know what matters when it happens. Final takeaway. So here's the alpha. Whales don't chase candles. They move capital before the move happens, and exchange flows let you see it. Now you know what inflows, outflows really signal, how to read them in context, where to find the data, how to combine them for pre-breakout setups. Drop a comment. Decode stablecoin flows next. If you want to go even deeper into real-time liquidity, subscribe to the channel.
If you see any comments promoting random coins or promising huge returns, ignore them. We never endorse projects in the comments. Stay smart, stay safe, and always do your own research. Stay sharp, stay early, stay informed.